What are the best stocks to buy now? Can you guess the number one question I've received so far in 2024? And it's not actually that one. The answer might surprise you. Stock picking, especially in growth stocks, can offer massive outperformance and life-changing results. As I said in the last video, stock picking is not as hard as it seems. I personally will focus on secular growth trends, understand these trends, connect the dots, and then invest in the companies, the best of breed companies within those megatrends. But there are other tactics that I use to help explore new ideas. So the number one question I've been asked this year, can you guess? Eric, how do you find new stock ideas? Now, please don't misconstrue the intent of this video. I don't go out and use one tool and go buy the stock. But using a screener, for example, Seeking Alpha's screener tools, well, they can provide ideas to explore. Now, for me personally, these are usually going to be what I call fringe plays. So not core positions, ones that have higher risk reward, more speculative. But these type of stocks have huge upside potential, and they can really move the needle with your portfolio. Today, I'm going to share the top 3 stocks to buy now according to Seeking Alpha. And one of these stocks actually has the word cloud in it, but it might not be what you think it is. Stick around to hear about it. All right, so the first thing we do, we go to seekingalpha.com, and what we're going to use is right down here, we're going to go under top stocks. The first stock that comes up is a company called Surgepays. The ticker is SURG. No, not the Surge soda from the 90s. This is a fintech and telecom provider serving underbanked and low-income customers. It offers prepaid wireless and financial products to consumers who don't have access to checking accounts, credit cards, etc. And they're starting to use convenience stores more and more as a primary point of distribution. Now, this video is going to be rapid fire, so not a lot of depth here, but just from a high level. So the company has an FCC license, and this deals with subsidies through the Affordable Connectivity Program that gives $30 a month subsidy for each customer for mobile, as well as $100 LTE-enabled tablet. So the fintech platform is going to offer a variety of financial and prepaid products. Now, one thing to note right out of the gates, we always look for companies that have moats, or at least moat-like qualities, and this here shows 35 companies offering that free service under the ACP program. One big positive that I like about the company is it's continuing to expand its network of convenience store business. Currently operating at around 8,000 convenience stores, but there are over 150,000 of these stores across the United States. So Surgepays, technology and telecom company focused on underbanked and underserved communities. This company is headquartered in Tennessee, has 250,000 plus subscribers and 8,000 locations nationwide. So the market opportunity here, 100 million plus adults in the United States are prepaid customers. And over a third of the population is either underbanked or unbanked, not having a bank at all. When you think of unbanked, the first thing that comes to mind for me at least is Mercado Libre. Latin America, huge total addressable market there. When you think of the United States, you generally don't think of the US as being unbanked. So looking at the breakdown of that, 10% unbanked and 24% underbanked. Now, underbanked could be subjective, but those are the stats. Another quick thing to note here is they do enable third-party customer transactions. You can see Boost Mobile, AT&T, T-Mobile, Verizon, and more. Now, the stock is down almost 75% since it went public, and that was way back in January of 2019, well before the pandemic. So it has not performed very well, and it's something to keep in mind. I'm going to go through some metrics here in a second, but one thing to point out right away is this obviously is going to be impacted by the macro. The target audience, if you think about a recession or something like that, this is going to have cyclicality. If there's any sort of economic downturn, that could significantly impact the numbers here in the earnings. Another thing to note about this is even though it did go public in 2019, it was uplisted to the NASDAQ in 2021, and that could have some sentiment impact. In other words, it could be pooled in with a lot of these companies that went public back during the pandemic era. So Seeking Alpha is showing this as a strong buy across the board. You can see the rankings here. Currently $6.29. It's actually down 7.71% today. And this news is not from today, but it is recent here from January 18th. The stock was down 7%. Price is $15 million equity offering. So underwriters have a 45-day option to purchase 401,785 additional shares. So you're talking about some dilution here. One thing to keep in mind for valuation here, you're going to see the PE gap TTM, 4.73. That is attractive, but this company is not going to carry a premium valuation because of the nature of the business and its margin profile. Growth is solid, 41.8%. 58%. Profitability, the overall score is an A. Where you get dinged here is gross profit margin. That's only about 25%. You can see the other numbers are pretty decent overall. So Surgepays, the first stock, and it's one for you to explore. And later in the video, I'll give you a recap, just some overall thoughts of what I think about each of these companies, which one sticks out the most. So definitely watch that part. Now, the second stock on the list has the word cloud in it. In fact, the company is called GigaCloud. And so the first thing you think of, what do you think of when you hear GigaCloud? I'd be willing to guess that you didn't say that GigaCloud owns and operates an online platform that facilitates the sale and purchase of bulky items. So GigaCloud is going to connect furniture resellers in the developed world directly with manufacturers in Asia. Competitive advantages includes the fact that it operates its factories cheaper than others. It also is focused more on B2B versus B2C, so it's working with other businesses. And then third, GigaCloud's size and volume of sales. So definitely not a secular growth trend when you think about technology. Let's dig into it a little bit more and see if it's an opportunity. This is about as simple as you can explain it. You got the supplier on the left side, the end customer on the right side, and we're basically going to cut out the reseller and the retailer. So fulfillment is done through Giga, and there's only movement, physical movement, when something is sold. Now, this stock is up 258% in the last year. And I'll tell you why it's up 258%. Because the majority of people that are buying this stock, they think it's a tech company and that it's involved with AI, and it's not at all. Seeking Alpha is showing a PE gap TTM 13.53 and a forward PE of 10.57. Growth, revenue growth year over year, about 25%. EBITDA growth, very strong, 175%. You can see some other numbers. Profitability, this also has a low margin profile. So very close to the last one, around 25%. So a lot of times when you're talking about software companies, we're looking at 70, 80, 90%. This is going to be much lower. And that does impact the premium, the valuation that people will pay for it. So it's unlikely to have a 30 PE ratio or something like that. Just keep it in mind. Now, the third stock you hear about often, you probably have heard about this one actually because it's a Warren Buffett stock. So StoneCo, Brazilian fintech company. Earlier, we talked about unbanked or underbanked individuals. You think of Latin America. So one of the big reasons that I'm bullish on Mercado Libre is for its fintech solutions. StoneCo is going to be a Brazilian fintech company, offers a comprehensive suite of financial technology and software solutions. Overall, the numbers are pretty strong. I'm going to go through some other metrics. Here's some on your screen. Pause it if you'd like. Now, this stock is up about 70% over the past year. Year to date, it's down 3%. And if you do a quick Google search, you'll see, Warren Buffett stock, buy and hold forever. You get the idea. The company was founded in 2000. And one thing here that you really want to pay attention to, this is just me personally, headquartered in the Cayman Islands. Now, it doesn't automatically disqualify a company, but it is a red flag, something for you to consider. Valuation, the PE gap TTM, 27.56. Revenue growth, 17%. Forward revenue growth, about 41%. Gross profit margins, much more attractive here, 74.23%. So again, where I found these is you go down here and you click top stocks, it's going to pull up a list of stocks. And so you can see GigaCloud, Surgepays, and StoneCo. Now, next I'm going to share my thoughts on each of these companies and whether or not I'm going to research them any further. I'm not being paid to make this video for Seeking Alpha. I'm not sponsored by Seeking Alpha, but I am an affiliate partner. I do use Seeking Alpha services. I use several other tools. I would never discuss something that I didn't use myself. And even though I'm not paid to do this video, I am an affiliate and there is a link below. So if you decide that you want to sign up for Seeking Alpha, use my link. I make a few bucks. But again, this is a helpful tool that I do use, and it's a tool in the tool belt. I use several other tools when making a decision to buy a stock. Conclusion here, 3 stock picks to explore. If I think of the total addressable market for each of these, just the opportunity, the trend, I typically like to invest more in technology, especially with larger TAMs. I can tell you the second stock, GigaCloud, that's not going to be for me. It doesn't really fit into my personal blueprint. The company could do well. I hope it does great. It's just not something that suits me. The first stock was Surgepays. It is a bit more interesting because it has a bit of that fintech play, but if you really look at the core of the business and the low margin profile, it's not something I personally will explore more, but I do think the stock could go up quite a bit from here. And the last one, StoneCo, is probably the most attractive. The one issue I have is the fact that it's headquartered in the Cayman Islands. I have done some research on this. If you follow me, you know that I call fintech kryptonite. I tend to not do very well in the fintech space. And I don't come on here and pretend to be something I'm not. I'm really good at certain things, especially software and semiconductors. I certainly understand the technology space around fintech. It's just very difficult. Now, with all that said, if I were investing in fintech and I was trying to go for a more speculative name, StoneCo does stick out as one I would probably explore more. And the fact that Warren Buffett owns it should give you a little bit more confidence. That shouldn't be the only reason you would go buy a stock, but it should help a bit with confidence and sentiment because he wouldn't own it if he didn't think it was going to do well. Of course, everybody can be wrong sometimes, even Uncle Warren. I hope this video is helpful. If you're new here, subscribe to the channel, click the bell for notifications so you don't miss the next video. Drop me a like, drop me a comment, check out some other videos. Have a great rest of your day. Take care.